In this video, we want to talk about DraftKings, and they reported their quarterly earnings this past week. They raised their 2024 outlook for revenue after printing a solid Q2 report. However, the stock sold off. Now, a couple of things to note. We're going to start with the monthly chart. And we're just going to put a trend line from the lows of January of 2023. And I want to talk about why this weekly buy level did not work. If you look at the lows, price is selling at a discount. If you look at the highs, prices are selling at retail prices. When things are at retail prices, smart money typically sells to the retail investor. Down at the lows, you have the retail investor selling to the smart money. Name of the game is to buy low and sell high. I do want to point out this drop-based drop, which worked to the T. I did make videos in the past saying this was the level to take some off the table. However, let's scroll down to the weekly chart and look at that weekly buy level. So this was based on a rally-based rally, and depending on where you drew your zone, some folks like to draw their zones wick to wick, in which it would have worked for a reaction. I like to draw my zones at the top of the body. And so, reason why this level didn't work out, again, you're selling at retail prices, and when you have a weekly buy level that's up against a monthly sell level, and again, location is important, you are selling at a level which says price is expensive, then the probability of this weekly buy level holding up decreases drastically. Alright, so let's take this off the charts. And the question is, where's price heading next? Well, price has now formed a new trend line to the downside. We have a significant support resistance level at $32. We closed right at that level. However, you got to remember the equity markets are looking very weak, and 80% of a move, of a stock move, has nothing to do with the stock. It's all about the sector that it's in and the broader markets. And with that said, if we continue to get declines in the broader markets, this is the next level I'm looking at. It's that $26 support, resistance support band. With that said, let's get into the actual news. So DraftKings reported better than expected second quarter earnings and raised its full year revenue guidance as the online sports betting and gaming company continues to see strong customer growth and engagement. DraftKings raised its 2024 revenue guidance to a range of $5.05 billion to $5.25 billion, up from the previous outlook. The new guidance represents a 38 to 43% year-over-year growth. Here's what Jason Robbins had to say. He's the CEO of DraftKings. We very efficiently acquired many more new customers than we expected and saw continued healthy existing customer engagement in the second quarter. Now you got to remember, we are approaching on football season. This should be good for DraftKings. Now the company's board also authorized a $1 billion share repurchase program, reflecting confidence in its long-term outlook. It's not about what you've done for me lately, it's what you're going to do for me in the future. And DraftKings maintained its 2025 adjusted EBITDA target of $900 million to $1 billion. Again, I'm looking for more downside pressure. You could potentially see a break and a close below, pull back. This is your next target. Let's see how things pan out over the coming weeks and months. Thanks for watching. Subscribe. Please like the video.